Welcome to the Skilled MBA Finance Case Study Series. In this session, we explore a strategic inflection point for one of the most respected names in investment management, Vanguard. Long renowned for its leadership in passive investing, Vanguard now stands at a strategic crossroads. Rodney Comegys, global head of the Equity Index Group, must evaluate whether the firm should venture into the world of actively managed exchange-traded funds. While the move could open doors to new market segments and attract investors seeking active strategies, it also poses a potential risk to Vanguard's identity, long anchored in low-cost, index-based investing. This decision will define Vanguard's future positioning in a rapidly evolving financial landscape. Vanguard, with $9.3 trillion in assets, is renowned for its low-cost passive index funds and actively managed mutual funds. Rodney Comegys, global head of Equity Index Group, faces a pivotal decision: launching actively managed exchange-traded funds. This move could broaden Vanguard's market reach but risks diluting its core passive investment identity. Vanguard, with $9.3 trillion in assets, is a global leader in low-cost index investing and actively managed mutual funds. Its investor-owned structure ensures alignment with client interests, reinforcing its market leadership. This reputation for cost leadership and investor alignment distinguishes Vanguard in the competitive investment landscape. Exchange-traded funds are the fastest-growing investment products, appealing to both retail and institutional investors due to their flexibility and efficiency. They provide intraday liquidity, enhanced tax efficiency, and generally lower expense ratios than mutual funds. Competitors are expanding active exchange-traded fund offerings, challenging Vanguard's focus on passive products. Mutual funds are priced once daily at net asset value, often with higher expense ratios and less tax efficiency, and transactions occur at the end of the day. In contrast, exchange-traded funds trade continuously during market hours, offer enhanced tax efficiency, typically lower expense ratios, and greater transparency, especially for passive exchange-traded funds. These structural differences cater to diverse investor needs. Active investing involves analysts identifying market inefficiencies, with portfolio managers selecting securities and timing trades to exploit opportunities. However, this approach often incurs higher fees, and the iron law of active investing suggests that on average, active investors underperform the market after costs. Only those with genuine skill can consistently overcome these cost hurdles. Vanguard faces a pivotal decision: expand exchange-traded fund offerings beyond passive strategies. Active exchange-traded funds are growing rapidly, attracting billions annually. Competitors like BlackRock and Fidelity are aggressively expanding in this space. Investors demand the benefits of active management combined with exchange-traded fund efficiency. Balancing these opportunities against potential brand dilution is crucial for Vanguard's strategic direction. Active ETFs offer Vanguard a chance to tap into new investor segments seeking active management within an ETF framework. They provide structural benefits like tax efficiency and intraday liquidity. By leveraging its scale, Vanguard can offer these at lower costs, retaining assets and countering competitive pressures from firms expanding their active ETF offerings. Brand dilution could undermine Vanguard's reputation as a leader in passive, low-cost index investing. Operational complexity arises as managing active exchange traded funds demands different capabilities, potentially increasing costs and compliance risks. Philosophical tension may contradict Vanguard's long-standing message about the challenges of active management. Navigating regulatory hurdles involves balancing securities and exchange commission transparency requirements with protecting proprietary strategies. Technology integration demands systems for intraday pricing and active management. Talent acquisition focuses on specialists in active management and exchange-traded fund operations. Effective distribution channels are crucial for marketing active exchange-traded funds. These challenges necessitate significant investment and potential organizational restructuring. Financial advisors are the key market for active exchange-traded funds, appreciating their flexibility and potential for alpha. In contrast, traditional index investors remain loyal to Vanguard's passive strategies, showing minimal interest in active exchange-traded funds. Understanding these segments is crucial for tailoring marketing and distribution strategies effectively. The potential product roadmap for active exchange-traded funds involves a phased approach. Phase 1 focuses on strategic assessment, including market research and competitive analysis. Phase 2 involves a limited pilot with 2 to 3 active exchange-traded funds. Phase 3 targets expansion into specialist segments, while Phase 4 aims for global integration, minimizing brand risk and operational disruption. Active exchange-traded funds must align with Vanguard's mission by maintaining low costs while offering value. Competitors may lower fees, intensifying competition. To manage cannibalization, differentiate active exchange-traded funds from mutual funds. Communicate transparently about active exchange-traded funds, emphasizing their role within Vanguard's investment philosophy to uphold credibility amidst the iron law of active investing. Balancing market opportunities with brand identity is crucial for successful expansion. The exchange-traded fund structure offers unique value, independent of active or passive strategies. Industry leaders must adapt to evolving investor preferences and competitive landscapes. Execution challenges are as critical as strategic decisions, demanding focused implementation to ensure success. Thank you for exploring Vanguard's strategic considerations in the active exchange-traded fund market. For more finance strategy cases and resources, visit Skilled MBA at skilledmba.com or contact us at support@skilledmba.com.